Today, we're going to go on a little journey from the absolute chaos of a confusing chart to the clean, crisp clarity of a solid trading system. And look, this isn't about predicting the future. It's about building your very own rulebook for the market. So let's get into it. Ever feel like this? You're just staring at a screen that's a total mess of lines and colors and indicators, and making a simple decision feels, well, impossible. It's a classic trap, and it's probably the #1 reason traders get paralyzed.
But here's the secret. The pros don't have a crystal ball. It's not about magic. It's about having a system, a robust set of rules and tools that guides every single decision, manages your risk, and most importantly, takes emotion out of the equation. And that right there is exactly what we're going to build today.
All right, first things first. A great system starts with having the right tools for the right job. Think about it. The market has moods, right? It's not always doing the same thing. So you can't use the same tools every single day. You need a versatile toolkit. Let's kick things off with a strong, clear trend. You know, when the price is just charging in one direction, either up or down, trying to fight that momentum is like trying to swim against a riptide. It's a losing game. The real goal is to hop on and ride the wave. So how do we actually do that? We pair up trend with momentum. Our toolkit here uses moving averages to just confirm the big picture direction. Then we use an indicator like RSI to time our entry. Now here's the trick. You don't just jump in anywhere. That's a rookie mistake. No, we wait for a little dip, a pullback, so we can get in at a much better price, right before the trend kicks off again. It's all about precision. Okay, that's great for trends, but what about when the market's just stuck? When it's just bouncing back and forth between two levels, not really going anywhere? This is a whole different ballgame, and it will chew up a trend-following system. For these kinds of sideways markets, we've got to switch up our tools completely. We bring in volatility plus good old support and resistance. Bollinger Bands are awesome for this because they basically draw the boundaries of the range for us. We combine those with clear support and resistance levels. The game plan? Super simple. You look to make your move at the edges of the range. All right, now for the exciting stuff, the high drama moments, breakouts and reversals. This is when a quiet sideways market suddenly explodes in one direction, or a massive trend just stops dead in its tracks and completely turns around. The secret weapon here is pairing price action with volume. So you see a candlestick pattern that looks like a breakout, but is it for real? Volume, that's your truth detector. A big, massive spike in volume tells you that a lot of people are putting real money behind that move. Without that confirmation, you could be walking right into a false breakout. And trust me, there's nothing more frustrating. Okay, this next one, this is kind of the holy grail for a lot of traders, right? How do you spot a brand new trend just as it's being born? Nailing this can lead to those huge, outsized wins, but it's also where the signals can be really faint and really tricky. To pull this off, we need a specific combo: momentum plus trend strength. So an indicator like this stochastic oscillator is great for spotting a potential shift in momentum. But, and this is a big but, that shift alone isn't enough. It could be a fake out. We need confirmation that a real trend is actually building. That's where the ADX indicator comes into play. If you see the ADX start to climb, that's your sign that this new move has legs. So, okay, we've got these awesome toolkits for different market conditions. But, having the tools is one thing. Knowing how you're going to use them is another. And this leads us to a really big fundamental choice. It's like choosing your path. Are you going to be the artisan or the engineer? Let's talk about the first path, the rule-based system. We're calling this one the artisan. The idea here is simple. You've got a crystal clear rulebook. If A happens, you do B, period. But you're the one pulling the trigger. You are the craftsperson using your own judgment to make the final call. Now, the great thing about being an artisan is the flexibility. You don't need to be a coding genius, and if some crazy news breaks, you can adapt in real time. But what's the biggest drawback? Well, honestly, it's you. It's us. Our own emotions, fear, greed can make us break our own rules. And let's be real, we just can't be as fast or as disciplined as a machine. Okay, onto the second path, the algorithmic system. This is the engineer. Here, you take that exact same rulebook, but instead of following it yourself, you teach a computer how to do it. You code it in, and the machine takes over, executing trades at the speed of light with absolutely zero emotion, 24/7 if you want it to. The advantages here are massive. No fear, no greed, unbelievable speed, and you can scale it up to trade tons of markets all at once. But it's not a magic bullet.
You've got to have the coding skills for one, and you're vulnerable to tech glitches. But most importantly, an algorithm can't adapt to something it wasn't programmed for, like a sudden, once-in-a-lifetime global event. So there you have it. You've got the flexible, intuitive artisan on one side and the precise, tireless engineer on the other. Let's put them head to head and see how they really stack up.
This really breaks it down, doesn't it? The machine, the algorithm, absolutely crushes it on speed and emotion, or rather, the lack of it. But the human-led system, the artisan, wins on flexibility every single time. That ability to think on your feet when something unexpected happens. The key takeaway here is that one isn't just better than the other. They're just different, with their own major pros and cons.
Okay, so if both the artisan and the engineer have their flaws, where does that leave us? What's the answer? Well, what if you didn't actually have to choose? What if you could combine the strengths of both? This right here is where the cutting edge of trading is right now. The smartest players in the game aren't choosing man versus machine. They're building a team, man and machine working together. They are building a bridge between them to get the best of both worlds. So what does that actually look like? Well, you could have an algorithm generate the trade signals for you, but you make the final decision to click the button. Or maybe you enter the trade yourself, but you let the computer handle the exit automatically. Another popular approach is using automated scanners to sift through thousands of charts to find the few that matter, leaving the deep analysis to you. You can even use an algo to do the heavy lifting data analysis that informs a smarter manual strategy. All right, we've covered a lot. We've talked toolkits, philosophies, and the power of this hybrid approach. But now, let's bring it all home, back to the most important person in this entire equation, you. If you remember one thing from all this, let it be this: there is no single best system out there. It doesn't exist. The entire goal is to build the system that is best for you, one that fits your personality, your risk tolerance, and your lifestyle. So you have to ask yourself, are you an artisan, an engineer, or a bit of both? The answer is going to define your entire journey. You know, the market itself is a massive system of systems, a giant, complex machine running on fear, greed, and mountains of data. To step into that arena and actually succeed, you need a system of your own. So, the only question left is, what's it going to be?